these bonds are pretty much modeled after catastrophe bonds, which are pretty commonplace out there in the broader market here. The concern seems to be the triggers of which money can actually be released from these bonds, and that those triggers are too stringent to actually matter.
You are right. These are a kind of catastrophe bonds. I mean, they are modeled after the catastrophe bonds that are much better known for earthquakes and such disasters. And the problem is that it's very difficult to define triggers for epidemics and disease outbreaks. And as a result, the triggers are very complex. And because of the high uncertainty in the modeling, the triggers are not really suitable for the purpose for which these bonds were issued. That was for early disease control, but the triggers are much too high.
Olga, so one of the reasons that people like catastrophe bonds, and the premise of catastrophe bonds is people front a bunch of cash, then they get yield back every year, and if there's no catastrophe, they get all their money, but if there is a catastrophe, then they lose some of their principal. They like catastrophe bonds because they're uncorrelated. An earthquake or a hurricane isn't likely to have anything to do with the business cycle. On the other hand, one of the other issues is that if we have a pandemic, it's likely to cause major economic slowdown, and thus the performance is going to be correlated with the other assets that we're seeing fall all around the world.
Yes, exactly. That's one of the issues with this instrument, is that it's going to be pretty correlated with the rest of the market. So it's not a way to, diversify a portfolio. I mean, it's just not going to work because once it's triggered, everything else is going to be going down the way we have been seeing the last 2 days.
Right.
Okay, so this is the World Health Organization's financing facility. As we've talked about, there's a lot of flaws here. Would this, do you have confidence that this could be better designed if it were done in the private sector, by capital markets, by private insurers, for instance?
Well, I want to make it more precise. It's not a World Health Organization fund. It's a World Bank fund.
Pardon me, yes.
Yeah, it's not, it's, of course, the public health aspects of responding to disease outbreaks are definitely under the auspices of the World Health Organization. But as for improving the design, no, I don't think so. It's not possible. It's just not feasible at this time to design an instrument like this for epidemics. It's what we call an uninsurable risk. There's so much uncertainty in the model that's underlying this instrument that basically the risk that investors are assuming is model risk. Only part of the risk that they are assuming is the disease risk that was intended to be assumed, but much of the risk is actually model risk, and this just doesn't make any sense to create risk to offload to the market.
So is there an alternative here, though? I mean, the premise behind doing this did seem to be rooted in something, I guess, sincere. So is there an alternative?
Definitely. I mean, there is a much better option because, the error that was made right from the start is that there is a lack of money to respond to outbreaks. And it's simply not the case. And it's very, absurd for the World Bank to say that the reason that there was no response to the outbreak in 2014 earlier was that there was no money. The World Bank has a large fund for developing countries. That fund is now $82 billion for 3 years for the same countries that are supposed to have been benefiting from the pandemic bonds. So it's a question of priorities.
Right.
And a question of preparedness by the institutions and preparedness by the country authorities to, respond to an outbreak as soon as possible. The money is not the issue. It's the preparedness that's the problem.